Welcome everyone to the Stablecoin panel. Let's sort of start with our round of introductions. I can start. My name is Alicia Sidik. I run.
We still waiting for everyone else to join?
No, the other people are not joining.
Okay.
Yeah. Yeah. So fortunately, they won't be joining, so it'll be only the four of us today. Anyway, I run contact at
Two other people are not
here.
joining. Oh, is Tether and what you call it? The Smart Deck, are they not joining?
They're not joining.
Hello?
Hello.
Can you guys hear me?
Yeah, I can hear you.
Oh no.
You can hear us? That's weird.
Hello?
I can hear you, Alicia.
Yes, I can hear you, Alicia. Yes,
yeah.
You can continue.
Oh no.
He just got lost. Yep. Yeah, I think he just didn't hear you, like introducing yourself. So yeah.
Okay. As we wait for him to rejoin, I consider. Anyway, I'm at 256. We are a nonprofit aiming to increase diversity and break down barriers to entry in the crypto space. Joe, you can go ahead.
Yeah, my name is Joe, and I also is like one of the panelists in the previous panel. I am a research partner in Sperax. I designed our consensus protocol, BDLS consensus, with our academic advisor, Professor Wang, back in 2019. And also I'm participating in the economic design or architecture of Sperax, specifically the stablecoin, and also the economic simulation model. I work with our other two researchers, Andy and Nicholas, on this. And my background is mathematics and cryptography. I graduated from UCLA with a degree in mathematics of computation. And I'm very excited to be here today to talk with you guys. Looking forward to it.
Kory, can you hear us now?
Yeah, I can hear you now. Can you hear me?
Yeah.
Awesome. All right, I will go ahead and do my introduction. Hello, everybody. My name is Kory Hoang. I'm the CEO and founder of Stably. We are a fast-growing fintech company from Seattle, founded in 2018 by a team of former bankers and Amazon engineers. We've raised close to $3 million in venture capital funding to date, with some prominent investors such as 500 Startups and BNext and Pay It Forward. We're also the blockchain developer for a wide range of crypto tokens and stablecoins backed by real assets, including fiat currency like US dollar, Canadian dollar, precious metals, and also real estate and various other asset classes. And we work with a wide range of enterprise clients ranging from exchanges, metal dealers, merchants, other stablecoin companies, as well as blockchain foundations. And yeah, very happy to be part of the show today and share some insight on the stablecoin industry.
Awesome. Nadia, would love to hear from you.
Yeah, hey everyone, I'm Nadia. I work for the Maker Foundation. Maker Foundation is part of the Maker ecosystem and Maker, of course, where you can find the DAI, the centralized stablecoin that is pegged to the dollar and is backed by different tokens under the on the blockchain. I am in the team I am on the business development team, and I work. My work is focused completely in the development of the Latin American region, where we are looking for DAI adoption and new use cases for stable coins. And thank you for the invitation. Happy to be here.
Awesome. Looks like Kory.
Yeah.
I think it'll be really helpful to frame the discussion to start with, like, why stable coins, and why is it, despite like negative interest rates, we're seeing sort of major stablecoins doubling in value, sort of in market cap every 60 days. For instance, like Joe, love to hear from you.
Yeah, can you just repeat the question again? I didn't really get, what you want to ask. Yeah.
Why are people gravitating to stable coins, sort of despite sort of market conditions and sort of negative interest rates at the very moment? And sort of
yeah, I think this is a good question, a really good starting question to be specific. So I think the blockchain space has a big problem, the cryptocurrency. It's too volatile. Like if I invest in Bitcoin, it may, like the price now is pretty high, right? It's like I think around 16,000 now, right? But it can drop, right? Nobody knows, right? For certain. So stablecoin is, from my perspective, is a good transition point. You can help people on board to cryptocurrency. So I think the most important thing about stablecoin is it is stable in terms of the value. So it not only helps the mass adoption, like people have more confidence in playing with cryptos, have a good transition point. Also, it is good for technology innovations because people can have something solid in value to build upon, to develop their financial products on blockchain upon the stable value products. So I think that's my approach to this question.
Awesome. Nadia, also would love to get your take. My question, if you weren't able to sort of hear it in the beginning, was sort of, I think you can speak to it being from MakerDAO. Why are people gravitating towards stablecoins despite sort of current market conditions sort of, and sort of negative interest rates, and sort of what about stablecoins sort of makes it sort of very much sort of a prize at the sort of current market?
Sorry, did you it was for me, right?
Yeah.
Okay, sorry, it's a little wavy in my internet connection. So yeah, I agree with Joe. I think the stable coins are open the door for another kind of audience, and people who are maybe interested in something more like stable, as its name says. Also was like the starter point for creating new financial services on the blockchain. So I think that thanks to the stable coins, we are seeing more and more DeFi projects on the space, because it was important to have a stable coin as a base to create all these financial services. So I think important, like the conditions that we have in the market. Development of the DeFi space that we are seeing. It's not that important, but it's also to it. So I think with the stability of the stable coins and these new financial services, we are more open to new users and people who are maybe looking for different kind of investments, not just to speculate on the price of a token, but to think about like creating new markets, creating new financial services. So I think that this is like the starting point that we are seeing for a new economy. So I would love to see that in the next few years, the traditional market, it will be like the door to this DeFi space, but it will not impact, it will not be correlated as it is right now. So I think we are creating like this new financial economy, world financial economy, where we can like have access without borders, without any of the restrictions that we see on the traditional financial world.
So what are some of the most interesting use cases you're seeing there with like sort of having a stable coin that people are using.
Well, it's interesting because in Latin America, what we are seeing is that stable coins are not for crypto people. Like, of course, we can see crypto people like traders having stable coins when the price is fluctuating. But in Latin America, we are seeing an incredible adoption of stable coins because people are looking for options besides their own currency, their own fiat currency, because due to inflation and the pandemic, the economies in Latin America are more weak. So this looking for other options. One of it is the US dollar, but sometimes because of the restrictions of the country, it's hard for them to get that. So instead of having in your bank account a fiat currency that is losing its value, they are looking for stable coins like DAI, for example, to keep and maintain the value of their money, of their savings. So it's an interesting thing that we are experiencing in LATAM, because it started with people converting their savings into stable coins, into DAI, but now we are seeing people who are converting their income. So at the beginning of the month, when they receive their salary, the first thing they do is to convert it to DAI so they can maintain the value of the money that we are creating with stable coins, because we are not just like bringing stability into the blockchain, but also we are like bringing stability to the world.
Mm-hmm. I think this is a really nice segue into sort of my next question. I think with like DAI, like this summer specifically, like the yield farming craze specifically put to test its peg. What sort of, first of all, like a general, perhaps like general primer for our sort of audiences. So what are some of the key differences between fiat collateralized versus crypto collateralized stablecoins? And how well do you think sort of these corresponding pegs will work in the future? I'd love to hear from Kory.
Hear me now?
Yeah.
Wonderful. I just realized that I have this McAfee web boosting that's been interfering with the streaming. So if it happens again, please let me know, or just interrupt me and then I'll fix it. Okay, so at Stably, we have a very distinct view or philosophy on stablecoins compared to the rest of the market. Not to say that our view is necessarily the correct one or whatever. It's just how we view the market environment right now. We see stablecoins in several different generations, right? Of course, being the first generation is the Tether, the USDC, TUSD, and whatnot. These are fiat-backed stablecoin, and I call these tokens cornerstone stablecoins. And what a cornerstone stablecoin does is, it's supposed to transfer three things from the real world to the digital world: liquidity, yield, and risk. Okay. If you're looking at the case of USDC, for example, it's completely backed by US dollar sitting in the FDIC insured account. So liquidity, transfer over, yes. Risk, they're not transferring much risk over because it's all FDIC insured, right? Yield, however, we're not seeing any, right? And that is more because USDC is more of a US-based product. If you have a stable coin that is based in other markets or other currency, for example, Vietnam, right? Vietnam, the VND currency over there is paying 5-6% a year right now in annual interest. That right there is not, brought over to the DeFi world yet at this moment because Vietnamese stable coins are not a thing yet. They haven't really gained adoption over there yet. Therefore, all these unique economic advantages or characteristics of the Vietnamese emerging market is therefore not transferred over into the DeFi world. right? And so what we believe is, this first generation of cornerstone stablecoins, we're actually not fully there yet. I mean, we are already moving on to later generations, but this first generation here, we're not fully, expanding across all different markets yet, right? Mainly US dollar is the #1 asset that most stablecoins is pegged to right now. We don't see a lot of euro, we don't see a lot of Japanese yen or Chinese yuan or other emerging market currency, which have their own unique local markets and characteristics as well. And then, when we have more and more of these flavors, I think it will add to the uniqueness and other product offerings in later generations. For example, MakerDAO, right? MakerDAO is a decentralized stablecoin backed by Ethereum and other ERC20 tokens. I think recently you could back DAI actually with USDC itself, right? So now on at this second generation, you're starting to see decentralized stablecoin taking pieces of the first generation and incorporating it into their second generation, right? All decentralized and on chain. And then this year we started seeing a third generation start popping up, and these are what we call meta stablecoins, smart stablecoin, yield optimized stablecoin, whatever you want to call them, right? And the example of these are CUSDC, YCRV, YUSD, OUSD, MUSDC, etc. Right? You can take like a generation 1 or generation 2 stablecoin and put it into a DeFi protocol, and out comes this meta stablecoin that not only has the principal locked up, but it also has the interest locked up within it. So now this meta stablecoin not only is stable, it also is appreciating because it had yield locked up in it, right? And that's what we saw happening this year. Later, further down the road, what future generation of stablecoin are we going to see? I have no idea. But what I am noticing right now is kind of like the trend, right? Starting at the base generation, the collateralization ratio is like 100% or more than 100%. In the case of DAI, right? DAI usually has to be backed by 150% worth of Ethereum versus the actual dollar value that you're issuing out. So as you move up these generation, our theory is that collateralization ratio is going to drop down at some point, right? Imagine like this is 100% collateral, this is 0 collateral, like fractional reserve banking. We have to get from this point to this point at some point in the future, but there's this chasm of doubt and experimentation that's happening right now, right? Unbacked stablecoin, algorithmic stablecoin, things that are not fully backed or partially backed. How can they even work? How can they maintain stability? So that's this chasm right here that we're kind of in the experimentation phase that we got to get through. And so that's how Stably views kind of like the evolution of stablecoins that's going to happen in the future. And we design all of our strategy really to kind of like go along with this vision. And at the moment, we are mainly focusing on building better cornerstone stablecoins, the basic foundational money Lego blocks. That's gonna, basically be the foundation for all future DeFi applications. At least that's what we believe.
Mm-hmm. Joe, I'd also love to get your take on it, like on the evolution of stablecoins in the future.
Yeah, I really like how Kory categorized stablecoins into 3 generations. I think it's a good summary. Although I might not agree with every detail on like how you categorize each stablecoin in each generation, it's a good one. And also, pretty interesting what he said about the trending, like the collaboration rate will goes down. And I curious like how Nadia you guys saw this trending, like will you guys have a vision on will lower the collaboration rate for MakerDAO for DAI?
Yeah, well, that's a decision that we take with the community. Like we have a risk team that is an internal risk team, and also we have groups inside the community, and they are all understanding different is proposed as collateral in the protocol. For example, who are behind the token, who is behind the token, the market cap of the token, the second markets where you can resell, rebuy the token, that kind of stuff. And after a deep evaluation between the community and the Maker Foundation, we all decide on different variables around the risk of the token, and we use that input to set the collateral ratio for each collateral that we have in the protocol. It's a very interesting process, and I really, it will be great if you can join forum, and we have weekly calls where we discuss this kind of stuff. It will be amazing to have you guys helping us to find how we can improve the Maker protocol.
Mm-hmm. Sort of shifting gears towards the future and adoption. I'm really curious, since we have some Sperax sort of here represented as like S-Coin as an example of a crypto native stablecoin. Then we have sort of Libra as another example, and sort of the idea that I've heard thrown around of like multi-currency baskets that sort of functions sort of like an ETF for stablecoins. What sort of how should sort of regulation look like to make sort of multi-currency peg stablecoin a reality? I'd love to hear from you, Joe.
Yeah, this is a really interesting one because like we know like back in 2019, Libra when they first launched the Facebook, when they first launched their Libra project, they the most exciting feature is the multi-currency pegged stablecoin, right? But now we know they met some troubles with the governments, and they now decide to go a single currency peg first. I think I agree with their strategy because I think it is not a problem only about blockchain, about finance, but about sovereignty, right? It's a big problem. It's a big problem, right? And people take big problem should take it cautiously. Our strategy is the same. We want to first go a single currency peg because it's more feasible and less. We will meet less trouble from the regulation side. Also, for how will this multi-currency pegged stablecoin become a reality in the future? My perspective is we have to involve regulation, specifically involve governments to work on this together. It is a sovereignty problem, and no, like a company cannot do this by itself. And also, I'm quite curious about how, Kory, you think about this issue, because you talk about now stablecoin is basically focused on US dollars, and everyone wants to go, yeah, we want to expand beyond just US dollars. We want to go maybe Vietnam yen or Chinese yuan or Japanese yen, Hong Kong dollars, etc. So yeah, I'm pretty curious about your perspective on this question.
I'd love to share some insight. So right now, Stably has a US dollar stablecoin that's issued by Prime Trust. So our agreement, our legal agreement with Prime Trust actually makes them the issuer. We're not even the issuer of our own token. And Prime Trust under US regulation is a regulated trust company, which is considered a convertible virtual currency administrator. So under that legal framework, they're allowed to do that legally. And technically, Prime Trust can issue stablecoin pegged to anything legally, and we can supply the technology for them to do that. And they do have the ability to custody different fiat currencies. So earlier this year, we launched a Canadian dollar-backed stablecoin with Prime Trust. They are also the regulated issuer for that stablecoin. We did that for our client in Canada. It was a Canadian crypto exchange called Cadillacs. I don't remember what's the market cap right now. I think it's still less than $1 million or so because it's still a new project. But Yeah, and you know, that's basically a stablecoin issue under U.S. regulatory framework that is going to be circulating and put into use in Canada, and the exchanges that do use them in Canada regulate money transmitter themselves. So that's cool. As for other international markets that you know, lack sort of similar regulatory frameworks regarding money transmission or convertible virtual currency administration, it's a case-by-case basis, right? So, for example, Vietnam, right? We are creating a Vietnamese or Vietnamese dong peg stablecoin. It's pegged to the VND. However, it's backed by US dollar. And we place the trust offshore to make the product actually censorship resistant and anti-fragile. So if something were to happen in the future, you know, and we would need to be able to continue to operate this trust, regardless of what happens within Vietnam. We have the ability to do so, and we don't actually do that ourselves. We have a partner within Vietnam that is willing to take the risk and do that. So us and our partners, and the partners over there obviously works with the government. I'm not no expert in, you know, communist government policies and all that, but my partner in Vietnam is, and so we set up everything legally offshore, structure it technology-wise, paper it down, and then we're about to launch it and go to market next week. So do look out for the PR regarding that. That should be a pretty big PR, because this is going to be the first major Vietnamese stablecoin that's going to hop on the market.
Like with that, like I'm just curious, out of curiosity, what's your strategy to be compliant? And like I think MakerDAO can also speak to it, since I think you operate in 40 different places. How do you stay compliant and meet those requirements in the first place, especially when you're operating in those different jurisdictions?
So in these different let's focus on Vietnam, since we're talking about that already. We got to look at what the current regulatory issue or framework they have for crypto inside that country, right? So in Vietnam, it is illegal for you to use crypto as a means of payment. So you can't use crypto or stablecoins to buy goods or pay for goods for services. However, it is completely okay for you to buy crypto or sell crypto or trade it or invest in it or hold it. Completely okay. There's no ban regarding it. And so, you know, that means that, hey, there's room for, you know, digital asset companies to actually grow there. They don't specifically say it is, you know, it is illegal, it is banned, right? And so what we're doing is we're issuing you know, a digital token that represents whose values represent that of the Vietnamese currency, and we're circulating within the country as a digital asset, which is not illegal to hold or to trade or buy and sell, as long as you don't use it to pay for, you know, goods and services, then that is fine. You can actually even use this token to send it offshore, and that would technically be legal, because, you know, capital control regulations in Vietnam, that only concerns fiat. It doesn't concern Bitcoin or Tether or stable coins or whatever, you know, we create. So yeah, it really depends on each country's regulatory environment, and, you know, how willing are you to go in there and take the risk, you know, be the early mover in the space. Our official, you know, Stably's official strategy is, you know, we're more of the technology and strategic consulting partner, where, you know, we provide not only the technology but also the legal planning, go-to-market planning, and various other things. Like we connect our clients to exchanges and other partners that they could then integrate with, and also, you know, distributors like market makers and OTC does, so on and so forth. We don't actually stand out and issue the token or go to market ourselves. So, you know, we're not experts in any one of these markets. We rather find a partner who is actually an expert to do that, and that's working out well so far. And you know, we look to scale this business model up significantly next year as we enter more and more emerging markets under this framework.
Mm-hmm. Nadia, I would love to also hear your take on it from MakerDAO.
Well, we are a basket of tokens. Our collaterals are a basket of tokens that support the value of DAI. Right now, because of that DAI is pegged to the dollar. but it can, and it's completely possible that it could change in the future. It's not in our roadmap right now, but I think if there's like a need of having another a stablecoin, a DAI, but pegged to another currency, it is completely possible, because what matters in our protocol is the value that is locked in the vaults, in the smart contracts that support all the DAI that is on the market. So technically, it is feasible. It's something that that the protocol can do. But then, of course, as Joe and Kory have been saying, regulators are something difficult. Is completely decentralized, so we don't have to deal with the regulators directly, but our partners, they have to do it. So they have like this problem on their backs, that when they decide to integrate a stablecoin, as DAI, or any other cryptocurrency, they have to be completely, totally compliant with the regulation inside the country. So that's like the tricky part on this, because we as Maker, we can have a stable coin that is pegged to different currencies. We also have this basket of different tokens that we are trying to find more tokens that are not related between them, because we want a distribution of risk, having different collaterals. Like right now, we are thinking of just tokens that exist in the blockchain, or stable coins that represent dollars, but also like a real estate company who has a token and want to use it as collateral to mint DAI. We want that inside the protocol. So I think we are like evolving to have these multi-collateral, and probably in the future, if there's a need, a multi-DAI pegged currency. But I think that the problem right now is with our local partners, who locally they have to deal with regulations. Because as Kory said, then you have to see local regulations, like for example in Vietnam, what is allowed, what not. Same thing in Latin America. Our partners have to think if people can buy like unlimited amount of cryptocurrencies, stable coins or not, if you have to pay for taxes for that or not, what does that imply? Like all of these are like local questions that have to be solved, and we have to work with the local regulators.
Mm-hmm.
Yeah, actually, we take the similar approach on regulation. Like we design our architecture to be, we do not directly engage with regulators, but we have like our nodes can be categorized two different categories. So one is normal nodes, like you have your PC, you have your Mac, you can have a Sperax node. But the second one is we have partnership with financial institutions. They run our financial node, and they have some advantages by running a partnership node rather than a simple ordinary node. But their responsibility, their obligation is to deal with regulators for us. Like one of them just newly joined us is Ember Group. I don't know whether you guys heard of it. It's like a famous investing crypto company. We will announce our partnership this month. So yeah, I think pretty much everyone
is that Ember AI? Sorry, interrupt.
Ember Group. Ember Group.
Oh, okay.
Yep. And yeah, so I think pretty much everyone, yeah, it's quite interesting to me, like you guys say, how you guys deal with the regulation. I mean, like everyone take the similar approach, which I just find maybe this is the most feasible way we find to deal with regulations. Right?
Hey man, someone in that country is going to be friends with the regulators, and some of those friends going to be entrepreneurs. You find those guys and you work with them. That's how it works.
Yeah.
Like I was wondering what your take is, like on like the issue of sovereignty. You see, like I hear hear a lot of talk about sort of governments and central banks speaking about sort of issuing their own sort of nation-state operated stablecoin. I'm hearing this especially not so much from like larger countries such as the U.S., but from like island states such as Tuvalu or wherever in the Pacific Ocean, discussing this. If and when do you think it's possible, or if not, you can also offer a economy point of view.
So I can offer firsthand experience. We actually work with a few of these guys from, I can't name names under NDA, but you know, they're island countries. They're usually very heavily towards destinations. There's usually, well, some of them right now have capital control due to COVID. They want to keep money inside a country. So now there's a problem with bringing money in, taking money out. So obviously, stablecoins make a very great solution for a lot of these island countries. So you know, a lot of these governments are reaching out to these island country governments are reaching out to players like Stably, players like Paxos, players like USDC to see if they can help them build their own CBDC in that country. And it could be either on chain using existing technology like Ethereum or whatever, or it could be completely a closed loop system where it's not interoperable or borderless at all. So different kind of flavors that you're seeing. And really, it's really these island countries that are making that. I mean, they can make a decision and they can move quick, but larger countries like the U.S. and France and China, China moves quickly regardless. But it's harder for these bigger countries to move as fast as the island countries. The exception, of course, here is China, right? China's, for various factors, China's kind of already moved their entire retail financial system or to the digital methods. We have WeChat Pay, we have Alipay, all these different methods that people in China can pay. They don't use cash over there no more. They don't even use cards over there no more. They just use their phone for payment. So in sort of a way, China is kind of already there. And this CBDC that China is issuing, it's just going to further consolidate their government's control over the economy of over the Chinese economy. And that to me means that token is likely going to be very heavily censored. It's going to be very heavily restrictive. It's probably not interoperable with the rest of the world easily, like USDC or USDT could be. And so I think that's what's going to happen. We're going to have, I guess, governments or central banks that are more free market minded, open minded. That's going to issue CBDCs that are interoperable and borderless and open loop. And then we're going to have players like China that don't want that kind of thing. They want something closed loop that they can control. And my take on this is whether or not the CBDC is closed loop or open loop, right? It's still a government issue. And so there's always going to be some sort of control or oversight or something about it. And people are just not going to want that. It's just natural, right? People don't want oversight. People want privacy. People want anonymity, especially with their money. And so no matter what the government does, what's going to end up happening is, hey, companies like me is probably going to start tokenizing those CBDCs and bringing them onto Ethereum, bringing them onto Stellar, bringing them onto Polkadot, etc. Right? And so I don't think, if anything, governments, central banks issuing CBDC will make my job a lot easier because, for me to take custody of cash, like in Vietnam, they use a lot of cash. I don't want to custody cash. That's hard. I don't want to count that thing. Counterfeit issue, COVID issue, So if they can issue me a CBDC and I can just tokenize that and put on Ethereum, way better. Way better. So I
agree. Completely agree with you, Kory. Completely agree with you. That will be an amazing collateral for the Maker protocol as well.
Yeah.
It's coming. Can't wait.
It's also interesting you point out CBDCs, and because I personally take CBDC quite different from stablecoins, because CBDC has its own closed system usually. But stablecoin is in a permissionless system like Ethereum or Bitcoin. So it is interesting to see how these two stablecoin interact with each other, and we will see in the future.
We're closing in on the time. So I'd love to sort of hear, I don't know, 30 seconds from each person, Nadia, Joe, Kory, some closing thoughts sort of on the state of the stablecoin space and like where adoption is growing. I know it's a very short time. 30 seconds.
I can make a quick announcement about Sperax. We are doing the final stage of our testnet. So our testnet will be launched by the end of this month, also with our economic design. So looking forward to it. Check it out.
Well, regarding the Maker protocol, we are working to have more and more collaterals, more unrelated collaterals. That's why, well, I already told you about the real world assets. So we are expecting to have like more volume of DAI in the market, and that will bring much more use cases on the DeFi space. And we are also seeing a lot of adoption in LATAM and in countries with evaluation. It's their local currency or any other fiat currency. So I think that that's great, not just for the Maker protocol, but for all the DeFi space.
Awesome. Okay, I guess it's my turn. I guess my message is to all digital asset entrepreneur all over the world. If you're looking to tokenize money, you're looking to tokenize real estate, commodities, precious metal, whatever it is, hit us up. At Stably, we can help you do it. We have the technology, we have the trust partners, we have the regulatory partners, we have everything that can make it happen. And unlike USDC or Paxos, I will pick up the phone, I will answer it. I'm the CEO too, so you can count on us. That's all.
Awesome. Great. I guess we're closing in. Thank you so much for sort of being here for the last 45 minutes. Thank you so much to sort of our wonderful panelists. And I guess that's it.
Thank you for having me.
So much, everybody.
Thank you.
Bye-bye.
Bye.
Bye.